Let's talk about FHA loans, because if you spent more than 5 minutes on social media or YouTube looking at real estate, you've probably heard this. FHA is a bad loan. Only people with bad credit use FHA. Or if you need an FHA loan, you shouldn't be buying a house anyway. And honestly, that mindset is costing people home ownership. So today, I want to answer one simple question. Should you get an FHA loan to buy your first house? And I'm going to do it like I always do. We're going to talk about why people say FHA is bad, what the loan requirements actually are, when FHA makes sense, and when it doesn't. But here's the truth. FHA is not a bad loan. It's just a loan with trade-offs. And if you understand the trade-offs, you can use it as a tool. And if you don't, you can absolutely get yourself in trouble. Now, before we get into it, if you find any value in this video at all, do me a favor and hit that thumbs up, and please consider subscribing to the channel. All right. Let's get into it. So why do people say FHA is a bad loan? Well, there are really three main reasons that FHA gets trashed online. The first is the upfront mortgage insurance premium. The second is the monthly mortgage insurance. And the third is this idea that FHA is only for people with low credit scores and small down payments. And if that's you, you shouldn't be buying a house anyway. But let's take a minute here and actually break these three things down. I want to start with the upfront mortgage insurance. Every FHA loan comes with an upfront mortgage insurance premium. That premium is 1.75% of the loan amount. So instead of just throwing that number out there, let's actually walk through what it looks like. Let's say you're buying a $350,000 home. You're putting the minimum 3.5% down. That's all FHA requires, which ends up being $12,250 on a $350,000 purchase. So your base loan amount is the purchase price minus your down payment. So $350,000 minus $12,250 equals $337,750. That number right there is your base FHA loan amount. Now here's where the upfront mortgage insurance comes in. FHA takes that $337,750 and multiplies it by 1.75%. That comes out to roughly $5,910. Now most buyers don't pay that out of pocket. Instead, FHA adds it back onto the loan. So now your loan amount that FHA is financing isn't $337,750, it's $343,660. That's the real number. And this is exactly why people say FHA is a bad loan. It's because it eats up your equity right at the start. But again, that's the trade-off. You're paying a fee to access home ownership with a minimal down payment. It's not good. It's not necessarily bad, it's just the reality. And the reason is you can't get around it anyway if you're using an FHA loan. Regardless of your credit score, regardless of your down payment, you're going to have the upfront mortgage insurance premium. On top of that, you're also going to have monthly mortgage insurance. But let's take a minute here and talk about it in detail, because this is another big point of confusion. With FHA, when you put only 3.5% down, you also pay mortgage insurance at a rate of 0.55% annually. You don't pay that once a year, you pay it monthly. So let's get back into our same example. Your final loan amount after the upfront mortgage insurance was $343,660. We now take that number and we multiply it by 0.55%. That gives us roughly $1,890 per year in mortgage insurance. We now divide that by 12, that comes out to $157 per month. Now that gets added back on top of your principal and interest payment, your property taxes, homeowner's insurance, if there's an HOA, that's your full housing payment. And here's the important thing to know. If you put the minimum down, that 3.5%, that mortgage insurance is going to stay on your loan for as long as you have that FHA loan, regardless of how much equity you build. And that's completely different from conventional. But this is also why lenders already factored this in when they approve you. So nothing here should be a surprise if the numbers are explained correctly. And that's something I want to mention here. If you're going on Google and you're just searching lenders and you're calling the first person that shows up, you're probably doing yourself a disservice. What I would recommend is working with a reputable lender that not only understands FHA loans, but does a lot of them. My team and I have helped hundreds of people here on YouTube. We'd love the opportunity to help you too. You can get in touch with us using that link in the description of the video. Now let's talk about the credit score myth. Now this one, if I'm honest, drives me absolutely crazy. Yes, FHA allows lower credit scores. that does not mean FHA borrowers are weak buyers. You can have a 740, 780 credit score and still use FHA if it gives you a better payment or requires less cash up front. And on the flip side, a lower credit score doesn't automatically mean someone isn't ready to buy a home. Life happens. Medical issues, divorce, job loss, student loans. FHA exists because not everyone fits into a perfect conventional box, and not everyone has 5, 10, 15, 20% to put down. So that doesn't make FHA a bad loan, it makes it a flexible one. Now with that said, flexibility comes with responsibility, which brings us to the actual loan requirements. So let's talk about what you actually need. First, credit score and down payment. Here are the rules. If your credit score is 580 or higher, you can put 3.5% down. If your credit score is between 500 and 579, FHA technically allows you to buy, but you need 10% down. If your credit score is below 500, unfortunately, you're not eligible. Now here's the important part. Just because FHA allows something does not mean every lender will. Most lenders out there have overlays. An overlay is an additional requirement that lenders put on their loans. So FHA might say yes at 580, but the lender you call might say that you need a 620 or a 640 credit score. That's not FHA being strict, that's the lender managing risk, which is why who you work with matters. Now let's move on to down payment versus cash to close. Another big misconception out there, FHA allows a 3.5% down payment. That does not mean 3.5% is all you need. You're still going to have closing costs. And depending on the market, the interest rate, and the lender, that's often another 1 to 2% that you'll need in order to buy a home. Sometimes sellers help with that, sometimes they don't. The point is, don't confuse minimum down payment with total cash to close. In my experience, that's where a lot of first-time home buyers get completely blindsided. Now let's talk about debt-to-income ratios, one of FHA's biggest advantages. FHA is probably the most lenient loan program when it comes to debt to income, which means they allow you to have more debt and actually still qualify for the most home using any sort of loan program out there. And this is one of the biggest reasons FHA can actually help buyers. In some cases, your housing payment can be in the mid to high 40s as a percentage of your income. And on top of that, your total debt can go into the high 50s. That flexibility is what allows many buyers out there to qualify when conventional says no. Now, just because you can stretch doesn't mean you should, but having the option matters. Now, one of the questions we get all the time is, can you use FHA to buy investment properties or second homes? And the easy answer is no. FHA is for primary residences only, which means you have to live in the home. You can't buy it as an investment property on day one. Can it become a rental later? And the answer is yes, it can, but originally when you purchase that home, you have to be willing to live in that property. Which means if you own another property and you're buying something and want to use an FHA loan, it has to make sense on paper that you would be buying that property as your primary home. Otherwise, it might be difficult getting it approved. Now, while we're talking about property here, I actually want to take it one step further and actually talk about property requirements when it comes to FHA loans. Because as far as the property goes, FHA appraisals, which you're going to have to get on every single FHA loan, they focus on basic health and safety. Things like exposed wiring, missing handrails, peeling paint, or major safety issues. And the reason I bring this up is because people act like FHA appraisals are impossible. Please understand, they're not. They're just stricter about safety than conventional. So when does it make sense to actually use an FHA loan? Well, here it is in really, really simple terms. If you have a limited down payment, if your credit score is decent, but not perfect, if you need flexibility on your debt to income ratio, maybe you have a little bit more debt and you can't qualify for a conventional loan, in that case, FHA can be a really good option. On top of that, you should also consider FHA when it gives you a lower or comparable payment to that of a conventional loan. And that last one matters. You should always compare FHA and conventional side by side, not based on opinions, but rather based on numbers. But at the same time, let's talk about when FHA does not make sense, because this part is important. If you have a short-term time horizon, FHA can be very, very risky. A minimal down payment plus upfront mortgage insurance means thin equity early on. If prices move sideways or dip and you need to sell in 2 or 3 years, the math can get tight really, really fast. Now, that doesn't mean FHA is bad. It just means the timing is wrong. Also, if you have strong credit, strong income, and the ability to put more money down, conventional might make sense long term. Again, side-by-side comparison. So let's answer the question, is FHA a bad loan? The answer is no. FHA is only bad if you don't understand what you're signing up for. Used the right way, FHA can be a bridge to home ownership. I've seen countless buyers use FHA to get in the door, then later build equity, and then refinance into a conventional loan with no mortgage insurance. But if you stretch too far and assume prices always go up or assume you'll refinance quickly, that's where people get hurt. So understand, there are no guarantees. But here's my question for you. After hearing all of that, do you still think FHA is a bad loan, or do you think it's just misunderstood? Do me a favor and drop your thoughts and your questions in the comments, and I'll come back and answer them later. And if you want a side-by-side comparison to see FHA versus conventional for your situation, make sure you check that link in the description of the video and get in touch with our team. And lastly, if you want an in-depth video on the 2026 loan requirements for FHA, do me a favor and check out this video here.